Welcome to the deep dive. We're plunging headfirst into, well, the fascinating currents of the global economy today.
It really is amazing how interconnected everything is.
Absolutely. It's incredible how trade impacts everything, from the price of your morning coffee, maybe, to really complex geopolitical relationships.
Definitely.
So today we're tackling a big question. How is the global economic chessboard truly shifting for the United States?
Mm.
We're going to dive deep into your sources, unraveling some, frankly, fascinating data. We'll be extracting the most important insights from detailed lists of U.S. trading partners' trade balances.
And even which countries count the U.S. as like their number one go-to trading partner.
Exactly.
And understanding these trade flows, it really gives you an invaluable shortcut to being genuinely well-informed about the U.S. economy's pivotal place in the world.
Right.
We're not just looking at the big totals either. We'll be examining different facets of trade, overall goods movement, but also specific categories, regional dependencies.
Yeah, and the full picture.
It's about seeing the complete picture of who the U.S. trades with, and maybe more importantly, why it all matters,
Okay, so let's unpack this then, starting with the big picture for 2024.
To it.
The 30 largest trading partners of the United States are, well, as you might expect, a colossal force. They represent a huge chunk, 86.1% of all U.S. goods exports
Wow.
and 89.6% of U.S. goods imports. Massive numbers.
Almost 90% of imports from just 30 countries.
Yeah. Now, an important note here, and you mentioned this earlier, these figures do not include services or foreign direct investment.
Crucial point. We're talking goods, physical things moving across borders.
Exactly. So what immediately jumps out from your data is the top 3 overall trading partners by total trade in goods for 2024. Mexico. It surged to the top. Nearly $840 billion in total trade. Then came Canada, close behind at $762 billion.
Right there, too. Neighbors.
And in third place, we find China at just over $500 billion, $582.4 billion. It's quite a reshuffling at the very top, isn't it?
It really is.
And we also need to remember the big regional trading blocs. The European Union actually had the largest total trade overall if you group them, nearly $976 billion.
Bigger than any single country.
And ASEAN, the Association of Southeast Asian Nations, came in with a pretty hefty $476.9 billion too.
What's fascinating here, I think, is that dynamic shift you mentioned, particularly Mexico moving into that number 1 spot, then Canada, then China.
Yeah.
This isn't just, numbers changing on a page. It profoundly reflects evolving supply chains, especially thinking about post-pandemic adjustments. We're seeing a tangible shift toward nearshoring, maybe friendshoring, playing out right here in these top-line figures. It signals a kind of reevaluation of economic partnerships.
That's a really compelling point about supply chains. But couldn't someone argue maybe that these shifts are just temporary, like a post-pandemic correction, not a permanent structural change?
That is the million-dollar question, isn't it? And while, sure, some aspects might be temporary adjustments, the data, I think, strongly suggests a more fundamental longer-term shift is underway.
Okay.
Companies have diversified supply chains because of past disruptions, learning lessons, and geopolitical considerations are increasingly influencing where trade happens.
Right. It's not just about cost anymore.
Exactly. It's not just about pure efficiency anymore. It's about resilience. It's about strategic alignment, too.
Okay. So we've got the big picture of who's trading the most volume with the U.S. But the real story often isn't just the total volume, is it? It's about the balance of trade.
Absolutely. The deficit and surplus picture.
That's the difference between what the U.S. exports and what it imports. This is where we truly see who's selling more to whom. And looking at 2024, the major trade deficits where the U.S. imports significantly more than it exports, they were quite pronounced.
No surprise there in some cases.
Right. China, for instance, had the largest deficit by far, a staggering minus $295.4 billion.
That's a huge number.
Yeah. The European Union followed with minus $235.6 billion. And Mexico, even though it's the top partner overall, also had a significant deficit at minus $171.9 billion.
So we buy a lot more from them than we sell to them, in simple terms.
Exactly. But here's where it gets really interesting, I think. While so much focus is often on the U.S. trade deficits.
Which get all the headlines.
Right. There are surprising pockets of strong surplus. Take the Netherlands, for example.
The Netherlands, okay.
Yeah, it's not always top of mind.
Right.
But it represents the largest U.S. trade surplus at a, well, staggering plus $55.5 billion.
Wow, 55 billion surplus with the Netherlands?
Yeah, it suggests a really unique and robust export relationship there, maybe beyond the headline figures.
Interesting.
Other notable surpluses, the UK with plus $11.8 billion, Brazil plus $7.4 billion, Singapore plus $2.8 billion, and Australia, quite large actually, plus $17.9 billion.
So it's not all one-way traffic.
Not at all. And to dig even deeper, your sources give us this metric, the ratio of exports to imports.
This adds another layer.
It does. Hong Kong had the highest ratio at 4.650. That indicates significantly more U.S. exports going there than imports coming from there.
4.5 times more exports than imports.
Yeah. And on the flip side, the lowest ratios were with Vietnam tiny, 0.096, and Russia, 0.167. This shows very high U.S. imports relative to exports with those nations.
Okay, this raises an important question, though. What do these balances and ratios tell us about the nature of these trading relationships?
Right. What's underneath the numbers?
Exactly. For example, that extremely high ratio with Hong Kong. It strongly suggests its unique role, probably as a re-export hub for U.S. goods, right? Stuff flowing through Hong Kong into other parts of Asia, rather than just being consumed there.
Makes sense.
Conversely, that very low ratio with Vietnam, 0.096, it clearly indicates a dominant flow of imported finished goods from Vietnam into the U.S. market. It speaks volumes about their manufacturing strength in certain sectors.
Yeah, you can almost picture the container ships. Okay, so we've charted the overall flow, we've looked at the balances. Let's zoom in now on the specific types of goods involved.
Right, the sector breakdown. This tells us even more.
It does, because it reveals global specialization. Now, it's important to note, this detailed breakdown by category, it's based on 2013 data.
Okay, so a bit dated, but still indicative.
Exactly. But crucially, these figures, they reveal underlying structural strengths and dependencies that, well, they largely persist today, even as the overall volumes have shifted. They offer foundational insights into the anatomy of U.S. trade.
Got it. Provides context.
So back in 2014, the U.S. had large trade deficits in several key categories. For example, the computer sector. Total deficit of minus $155 billion.
Wow.
And China alone accounted for a massive minus $151.9 billion of that, almost all of it.
So electronics heavily reliant on China back then and likely still are to a large extent.
Seems that way. Then oil, gas, and minerals. Total deficit of minus $149.7 billion. Canada was the big contributor there, nearly $80 billion of that deficit.
Energy imports, right?
Transportation, this includes vehicles. Parts showed a total deficit of minus $106.3 billion. Significant deficits with Japan, minus $46.2 billion, and Mexico, minus $59.5 billion.
Cars and car parts, a classic example.
Yep. And the apparel sector also had a large deficit, minus $69.9 billion overall, with China again being a major factor at minus $56.3 billion.
Clothes, textiles.
Yeah.
But like we saw with the overall balances, it wasn't all deficits in the categories either.
Okay, where were the surpluses back then?
The U.S. had trade surpluses in some crucial categories. The petroleum sector, for instance, saw a total surplus of plus $32.9 billion.
Wait, a surplus in petroleum? That seems counterintuitive given the oil deficit mentioned.
Ah, good catch. This likely reflects exports of refined petroleum products versus imports of crude oil. And Mexico contributed plus $16.6 billion to that surplus. Latin America as a whole, plus $18.3 billion.
Okay, refined versus crude, that makes sense. What else?
Agriculture, a substantial total surplus of plus $29.5 billion. And China was actually a major partner in the surplus, contributing plus $17.8 billion. So importing electronics from China, exporting food to China. Interesting dynamic.
Very. And it's also interesting to note that Latin America as a whole actually registered a goods trade surplus with the U.S. back in 2014, plus $32.3 billion. That stands in contrast to the deficits seen with China, the Euro area, Japan, Mexico, and Canada during that same period.
So if we connect this 2014 sectoral data to the bigger picture now, these deficits and surpluses, they reveal a lot about the U.S.'s domestic production capabilities versus its consumption and import needs, right, across different industries.
Exactly.
That large computer deficit with China, for example, it points to significant reliance on Chinese manufacturing for electronics. No escaping that.
Right.
But that agricultural surplus with China, on the other hand, it really highlights America's strength as a food producer, feeding a growing global demand.
Two sides of the coin.
It truly illustrates how specialized and, well, interconnected global economies are, even within a single country's overall trade relationship. It's complex.
Okay, now let's flip the perspective entirely. Let's ask, which countries count the United States as their primary export or import partner?
Looking at it from the other side, who depends most on the U.S.?
Exactly. This data gives us a crucial sense of global interdependence, and this is based on 2022 figures from the CIA World Factbook.
Okay, pretty recent then.
Yeah. So for countries whose exports primarily go to the U.S., we see some incredibly high percentages. Mexico, for example, sends 77% of its exports to the U.S.
3/4, wow.
Haiti relies on the U.S. for a remarkable 84% of its exports. In Canada, 75%. 84% for Haiti. That's like putting nearly all your eggs in one basket, isn't it?
It really is. Talk about dependence.
Other notable examples. St. Kitts and Nevis at 61%, Nicaragua 52%, the Dominican Republic 50%. Half their exports heading north.
Mm-hmm.
And when we look at countries whose imports primarily come from the U.S., the story is just as compelling.
Who's buying mostly American?
The Bahamas gets 59% of its imports from the U.S. St. Kitts and Nevis, 47%. Canada, 56%. Mexico, also 56%. Antigua and Barbuda, 57%. And St. Lucia, a staggering 76% of their imports come from the U.S.
76%.
Yeah. So what does this all mean? I mean, it truly highlights the incredibly strong regional ties, doesn't it? Particularly with our North and Central American neighbors and many Caribbean nations.
Absolutely.
For these nations, their economic pulse is, well, it seems inextricably linked to the U.S.
This really underscores that deep economic interdependence, especially, as you say, with our immediate neighbors. Imagine running a small business where, like, 4 out of 5 of your customers are the same one company.
Yeah, that's a good analogy.
That's the scale of connection we're seeing here for a country like Haiti or St. Lucia. And this leads us to a crucial point, I think. How does being a primary trading partner impact these countries' economic stability and their broader foreign policy decisions, too?
Right. It must give the U.S. significant influence.
It grants the U.S. significant leverage, definitely. But maybe also immense responsibility in those relationships. It's a two-way street, even if the dependence feels one-sided sometimes.
We've covered a lot of ground today, haven't we?
We certainly have, from the big picture down to the details.
Yeah, we started by exploring the shifting landscape of overall leading trade partners, like Mexico, Canada, China.
Seeing that reshuffle at the top.
Then dove into the intricate details of trade balances, those surpluses and deficits, the ratios.
And looking at specific sectors based on that 2014 data for context.
Right. And finally, we recognize the United States' pivotal role as a primary partner for so many nations around the globe, especially nearby.
And it's worth repeating, I think. These numbers, they aren't just statistics on a spreadsheet, are they?
No, not at all.
They represent immense flows of goods, capital. They shape economies, create jobs, influence lives around the world every single day. They're really the arteries of the global economy.
Well said. So think about all this. What stands out to why you, our listener? As you reflect on these evolving trade relationships, influenced by everything from global events to technological shifts, consider how they will continue to reshape the economic landscape, not just for the United States, but for its partners, too, in the years to come. Something to think about.